And now Wall Street Alliance Group, their partner, Aadil Zaman. Aadil, so first of all, what would be the impetus for a correction? Because it's felt like we've been due for a while now.
Yeah, I mean, the market's been stretched, right? It's gone up, it's had a monster rally since October. And once every few years, we do get a correction. I think this would be around the time. It's looking a little exhausted.
But what pushes it over the edge?
I think it could be tomorrow's employment report. If it is too robust, that could be a cause. I think at this point, or if the earnings, if the earnings start coming out slightly negative, that could be a cause. Market will probably look for a reason to correct a bit.
So here's the thing, though, and I don't disagree with you, but it feels like Jay Powell is telling us, watch the job market, watch the job market. And I'm saying we get an unemployment number of 4.1, or above 4.0, 4.1. I think the argument's going to come back. Rate cuts, accommodate a Fed, that might take us even higher. If we have a situation where somehow we start to reignite, what do you do in that circumstance?
So, well, we stay diversified. We keep our exposure in the market. Long term, we are still constructive. You know, Powell told us yesterday that rate hikes are off the table. Eventually, we'll get cuts, whether it's this year or next. And we think even if we do get a correction, that's an opportunity for the long-term investor.
I know you like utilities. Now, I was in one utility this year. I sold it because I'm a little early, but I like the sort of value proposition that AI and everything else sucking up all this energy. We're going to have an electricity crisis. Do you like it for that reason, or do you like it because it's been such a massive underperformer?
Yeah, it's the worst performer of last year. So for both of those reasons, you know, what a lot of people don't realize is that artificial intelligence consumes a huge amount of electricity.
It's crazy.
It's crazy. So the demand for electricity is going to surge, and a lot of these utilities are underperforming, like you said, and they're paying good dividends. So that breadth in the market we think is going to continue to improve. That's a sector we really like.
I got to ask you about Apple. I know you're long, right? Are you long Apple?
Yes.
Reporting after the bell, it's been sort of trailing. What do they have to say, in your opinion, to turn this thing around?
I think that we really like it going into the earnings. If you look at Tesla, it fell before the earnings, then shot up right after that. Something potentially similar could happen with Apple. And let's say it doesn't happen. I think that, you know, the next catalyst could be the iPhone 16 release, plus with the announcements of enhancements in artificial intelligence, that could boost the stock price as well. So going into the earnings, we like the stock. And
before I let you go, you mentioned the utilities and dividends. I also think, I heard, Brett, that you like dividends at this point also.
I think the dividends are going to make a comeback, in our opinion.
There's like 4 types, right? I mean, so you got low yield, medium yield, high yield, dividend growers. Is there a specific area that you're looking for?
I think generally some of the high dividend paying companies we'd really like, because we think that eventually we'll get rate cuts. So money will flow out of money market, which is near $6 trillion, and go into dividend payers. And a lot of companies are joining the bandwagon, Meta and Alphabet included. They also started
their first dividend, right? That was big news with Google. All right, well, great stuff.
Great stuff. Thank you.
See you again real soon.
Awesome.
Thanks a lot.